Thanks for joining us. My name is Ibrahim Sani. We take a look into the recent MPC or the Monetary Policy Committee's decision to not raise the OPR. It stays the same the second time, I suppose, for this year. Of course, this is after a series of hikes that Bank Negara Malaysia has done over the past 1 year. Joining us is Julia Goh, the senior economist at UOB, dialing in from Kuala Lumpur, trying to make sense with us in terms of what the direction is when it comes to the OPR rate. So the OPR, of course, Julia, is paused for the second time this year. The MPC is going to meet again in May. What are the expectations, at least on behalf of UOB?
So the overnight policy rate, or OPR, is not adjusted on a whim. The Monetary Policy Committee's recent decision is in line with our estimate and Bloomberg consensus, whereby 11 out of 20 polled analysts expected a rate pause. The decision by Bank Negara last week is necessary to further assess the impact of the cumulative OPR adjustments of 100 basis points last year. And this takes into account the lag effects of monetary policy.
Okay, what does that mean, generally speaking? Are they not trying to address inflation rates? How do you make sense from this?
So it is likely a more gradual approach, right? So I think it's gradual and measured when it comes to OPR adjustments. The MPC will not adjust the OPR just because the US Federal Reserve is hiking theirs. Also, according to the latest data from the Department of Statistics, inflation is trending down as headline inflation decelerated for the fifth month to 3.7% year-on-year in January. And the MPC did say they will remain vigilant to cost factors, including those arising from financial market developments that could affect the inflation outlook. So it makes sense for Bank Negara to take a pause at this point in order to calibrate, reassess before deciding on the next move. And we have to remember that while monetary policy is not the only tool to manage inflation, but it remains the most effective tool. So from here, we could see another round of hike, especially if the MPC sees an upward rise or trend of inflation.
Julia, so back to my earlier question. So what does this mean? Does this mean that Bank Negara is comfortable with the inflation rate right now and how to address it?
I think they're comfortable with the balance of risks between inflation and growth. They did continue to signal that further normalization of monetary policy would depend on potential developments in the markets or even changes to inflation and the economy. So I think going forward, it's the Bank Negara is keeping the door open, but it's subject to economic developments. And as such, we think that maybe one more 25 basis point hike to 3% could be on the table at the next policy meeting in May. And thereafter, we think the central bank may then keep rates on hold for the rest of the year.
These economic developments that you alluded to, maybe you can share with us what types of economic developments that they are thinking of when it comes to perhaps raising the rates by 25 basis points.
I think it's more of potentially growth-related or potential new shocks or risks. And even inflation, for that matter, could also depend on domestic policy developments. For instance, if it's a removal of subsidies, right? So all these, I think, need to be taken into context. Even if subsidies are removed for inflation rises, also needs to be considered how consumers behave or react to it, especially when you see that if, let's say, growth momentum or consumption behavior starts to slow.
Very recently, the government has announced that the targeted subsidy for fuel has to be adjusted. Petrol might not necessarily be introduced anytime soon. They might start with diesel. These kind of announcements, do you think the reaction is going to be, what kind of reactions are you expecting from the public following these kind of announcements?
So I think based on our projections and our assumptions, we expect the government will be quite gradual and sequential in their approach when it comes to removal of subsidies. And I think this will actually help to manage the inflation pressures. And of course, there's also existing excess capacity. So that I think it's going to be, it should help to cap the upside risk for inflation. And so I think as far as the consumers are concerned, coupled with the recent measures announced in the retabled budget, I think this will also help provide underlying support for the private consumption growth.
So do you feel that these kind of wait and see approach is going to be effective in addressing issues like inflation?
I think at this point, I think there are also growth risks to consider. And if you look at the external environment, I mean, with the recent fallout of the US banking sector, I think there are a lot of external risks arising. And as far as growth momentum is concerned, we are seeing some moderation in the growth outlook with potential external risks. So I think it's probably a sensible approach to pause and take a more cautious stance at this juncture.
You were mentioning that the 25 bips is a possibility. Is that a consensus among analysts if Bank Negara would hike it again this year?
Yes, I think generally majority of analysts are still expecting, possibly a 25 basis point hike. But I think the end of the rate hiking cycle is near. So we don't think that there will be as many rate hikes as we saw last year.
Another angle I want to ask is on the ringgit. It has been appreciating against, or depreciating, pardon me, against the US dollar. It's hovering at 4.5 right now after strengthening following the announcement of the Prime Minister. And of course, at current moment, sitting at 4.55, it's the highest that we've seen for this year. It's also the highest that we've seen for the past few months. Where do you see this going from here?
So the dollar ringgit has actually come off slightly below 450. And we think that the ringgit will be driven by external factors at this juncture. This week, we saw renewed volatility in global markets as a result of the fallout from the US banking sector. There is a possibility that the US Federal Reserve may go slower to raise US rates or even pause rate hikes. So if the path for the US rate hike slows, this would help regional currencies, including the ringgit, to recover. And our house view is for the ringgit to stage a more concrete recovery in the second half, alongside a more sustained recovery for China, the renminbi, and also the rest of Asia, due to the high correlation and spillover effects.
All right, thanks, Julia. Final word before we conclude our conversation?
Yes, so I think we need to keep watch of potential risks on the horizon. And I think, staying cautious at this point probably is the right move, right? But I think we also have to keep watch about potential inflation risks, as you alluded to earlier, given that, if the government decides to start removing some of the subsidies in the second half of the year.
Right, thank you very much. That was Julia Goh, the senior economist from UOB, dialing in from Kuala Lumpur. Thank you for joining us. Catch you in the next one.